Hey, welcome. That was the closing bell. So we are officially done with this week, Friday. It's been a kind of slow creep upwards during the entire week. We finished off kind of meek and mild, which is not unexpected going into the weekend and with even more earnings coming up and the rate decision coming up. So let's just take a look at how we look overall and if anything has changed at all. And so let's see how we develop during the day. So S&P down tiny bit. So right into that blue line that we drew. So this blue line is looking really good so far. The interesting thing is that this is the first down day that we've seen in quite some time. Let's see, we've got 1, 2, 3, 4, 5, 6, 7. So a week and a half. This first down day we've had in a week and a half. So potentially seeing a little bit of a turning, and this could just mean sideways chop. So it doesn't necessarily mean that we are going to pull down right at this moment. It could turn out to be another November event where we just go sideways. QQQ did something very similar, except it pulled down even more as we were expecting. There was even more weakness in the QQQ. It does have a little bit more to fall. It did lead on the way up, so it makes sense for it to lead on the way down. The Dow Jones is actually up a little bit, 0.14%, but really just chopping sideways. It is stronger than the QQQ over the past week. Well, I guess by the end of the week, they're the same. So the QQQ was stronger and it did actually make a move upwards, but basically ended very close to where it started the week, whereas the Dow Jones basically just stayed the same throughout the week. So whether that's stronger or weaker, that's pretty much there. I would call that on even ground. What's going to be interesting is whether or not we saw any changes to the sectors that are being paid attention to. The VIX, did any volatility come in with any of this? And then what the outlooks might be for earnings and for the rate. Well, the rate hike is probably a moot point. There shouldn't be any surprises there. So let's take a look at earnings. Then we'll take a look at sectors and see what we can find out. Next week, S&P 500. I guess we already looked at this. But we have all the FANG stocks. So that's another good reason for markets to pause. Really just looking to see how the communication sector is going to be doing in terms of earnings, how the FANG stocks are going to do, how the Magnificent Seven, a lot of those are overlapped, almost the exact same companies. So there's going to be a lot of interest in how Google does, how Facebook or Meta does, Amazon, Apple, all of that. So we're going to pay close attention when those earnings come out, and that will probably be the main driving force for whether or not we go up to new highs. What happened to this is Dow Jones. If we go up to that 490 resistance that we had in the S&P 500, or if we go beyond it, or did I say that incorrectly? If we go beyond the 490 or if we pull back from it. So for now, over the weekend, there's probably not going to be too much news unless something really crazy happens around the world that's going to move us off of that position. The FOMC meeting is midweek. It's usually on Wednesdays. I don't know if I can see it on this. I probably have to look at a different calendar in order to see it, but usually it's on Wednesdays. And then we've got these big, let's see, when Google, let's see, Apple is, where's my financials? Okay, so Apple is Feb 1, so that's midweek. We've got AbbVie, Feb 2, that's midweek or slightly later in the week, I think. Oh, that's Thursday, so it's still midweek. Wednesday, Thursday is when most of them report, sometimes Tuesday, Wednesday, Thursday, but the bulk of them would report on Wednesdays. And then let's take a look at Amazon. Amazon is also midweek. We've got Meta. Where's Meta? Google is the beginning of the week. And then Meta is not here. Oh, previous page. Meta is midweek. So a lot of stuff happening in the middle of the week. The only one kind of giving us an earlier clue would be Google. That would be on Tuesday after March. So that's still midweek. Okay. So basically we need to wait for the middle of the week. So don't be surprised if we don't get a lot of action on Monday or Tuesday. Wednesday is going to be really key. We have the FOMC meetings and all the important earnings are happening on Wednesday. Let's take a look at our sectors and see how we did today. Healthcare, staples, energy, retail. So even more defensive sectors are showing up at the top today. Yesterday we had utilities and energy. Today it's staples and energy, healthcare and energy, some interest rate sensitive stuff. So we got XLY, consumer discretionary and retail. It's interesting to see those up there with the more defensive stocks, but the main theme is not tech. So we're pulling away from tech. Where's XLK? XLK is way at the bottom. SMH is way at the bottom. So semiconductors and tech are highly disfavored today, and basically everything else, but mostly safe sectors. So we're starting to see that move away from the QQQ type of stocks and into more defensive sectors. So it's looking more and more like this market is preparing for a potential pullback. Let's see how VIX did today. VIX started up out high, went higher, and then ended up even. Okay, so we did get a little bit of a spike in the VIX today. Let's take a look at an intraday view. Let's look at VIX versus SPY. Okay, so here, so as we move down, that's interesting, VIX was moving down. And then when we moved back up, VIX was moving down. And when we came back down, VIX basically just popped up right at the beginning and then came all the way down. This is probably an anomaly, so we can probably erase this top tail up here. So, or wick, I guess I should say, the wick up there. So this basically, VIX just went down throughout the day. So there's a little heightened nervousness during the day and it just came down. So VIX is not yet supporting the turnaround. So investors or Wall Street or institutions are not too concerned just quite yet, but they are concerned. So basically what it means is there's not fear, there's not panic, but there is caution because we are moving money away from tech and into safe sectors. So when there is fear and when there is panic, that's when we're going to crack and start getting a pullback or a correction. If there's fear, then it'll be pullback. If there's panic, then there will be a correction. So we'll want to watch that very carefully. We'll be watching VIX very carefully. We'll be watching the sector mix very carefully, but most importantly, next week, FOMC meetings and earnings. I think that's about it. Let's take a quick look at the fear and greed index. Yeah, we're still at extreme greed. So we should see this sweep downwards. And the faster, the more panicked we are, the faster that'll sweep downwards. But we should get below neutral by the end of it. So everything, at least this is lining up with the VIX and the story that we're seeing in terms of the movement of money in the reallocation of the sectors. It's been just a couple of days since that happened, so we wouldn't really see it in the 1 week unless it was a lot of money that moved. So energy, financials. Okay, so maybe we are just barely beginning to see it on a 1 week basis. So that money movement is fairly strong if we could see it already, because we only noticed it on a daily basis starting yesterday. If it's already showing up on the 1 week, that means those 2 days were enough to move the average for the week. So at least in terms of energies, it was, and in financials. So like XLU still down here, XLP is middle. Okay, that's interesting. So let's see where it was a few days ago. See, XLP was just 2 days ago, XLP was at the bottom. So enough money moved over the last 2 days to get XLP towards the middle to upper half of the middle. So that's a lot of movement. That's a lot of movement of money coming into XLP, XLU, the defensive sectors. So as we see this money move, we want to become more cautious as well. Again, we're not saying that we want to front run it and that we want to start pointing our portfolios downwards, but we do want to take a look at those hedges. So I don't know if I saved the option strat. We looked at a long puts on QQQ for the April 375 put. What's going on here? Let's try that again. Long put, QQQ. Why don't I have any strikes here? That's really weird. Let's take a look at this options table over here then. So QQQ, we looked at April. You can see that I actually put on a position. The one that we looked at was 375, not 365. And at that time, it was at about $2. So right now it's a little pushing 220. So 18, just call it 18. 18 divided by 2, 9% move over the day. I guess it'd be 2 sessions, over the last 2 sessions. Not a huge amount, but for a option that is so far out, right? We're over 3 months out, and or not, maybe not over, just under 3 months out, and for it so far in the money for already to move 9%, actually that's pretty major. So normally these are super out of the money. They would get eaten away by time decay pretty quickly at the beginning. This 4 cents versus that $2 is a lot more significant than 6 cents versus $12. So relative to the amount invested, that time decay operates at a higher percentage, at a higher rate, a faster rate. So the fact that we were able to overcome that time decay over the last 2 sessions and still be up about 9%, that's pretty significant. So it's looking like more and more that it's pretty good feel that we are going to get that pullback or correction. But again, we don't want to front run it. We just want to be cautious and put a few hedges onto our portfolios. So this has been a huge game of wait and see for weeks now. I feel like a lot of our sessions have been shorter because there's not that much new information on a daily basis, because for the most part, markets go sideways. Right? So every time we hit these sideways periods or these sideways periods or these sideways periods right here, we just kind of wait and see. Is it going to pull back or is it going to go higher? Or is it going to keep on chop? When is the chop going to end? And right now, we're just waiting. It's been going up, but just very, very slowly. So we're still kind of in this wait and see mode because we're so near that psychological resistance. Not that much can happen until we reach that point. And it's a perfect timing and confluence of, we've got the FOMC minutes, we've got earnings. So a lot of money is just sitting there waiting to be allocated, just waiting to see what happens till we gather a little bit more information. And then when we get the information that we want, or Wall Street gets the information that they want, then that's when action will start to happen. But we already see that they're becoming more cautious. So because we could easily chop sideways but still had the exact same stack of sectors, that the XLK and XLC could still be leading if while we're moving sideways or slightly moving upwards, but that isn't the case. So we are seeing more caution in the markets, and we just want to be aware of that and just make sure that we're not making huge bets. We're not allocating huge amounts of our portfolio right now, and whatever that we are putting on, we have a protection against it. Okay, that's it for today or this week. Have a wonderful weekend, and I will see you all on Monday.